Well, it's great to be here today with everybody. I know we were just having a little conversation here about how stressful everybody can get in this time of year, and with everything going on, the concept with fear of changes in our lives and changes in what we're used to, and what goes on with our kids and our parents and our family, and concerns about the infection rates and everything else going on. Um, I know this is a stressful time for everyone, especially local leaders navigating budgets, and certainly that isn't lost on us. So we think these teleconferences are a great way to share best practices and keep communications going with our peers. And we've been hosting calls with our partners across the state, from school board officials to county commissioners, and I'm happy to be here with you today. What we're doing, let's first of all just give you a little overview of what our office is doing with regard to your audits. We are predominantly working remotely. Before this all started, 600 of our 800 employees had remote work capability and worked remotely from time to time, whether it's out in the field doing your audits or doing other things. The reality is that for us, going to full remote work was a relatively straightforward switch. And right now, most all of our staff are still working remotely. I'm happy to report that our productivity has been high, and our completed audits have been on pace with 2 years ago and a year ago, which are our metrics that we model against. And so our staff are doing their part. I'm proud of them. They're doing a good job. That doesn't mean everything's the same. It might mean a difference when they need to get data or records from you. If they can't get it easily remotely, they're going to have to come in and pick up the records and try and do that safely. And we're just asking everybody to cooperate with both my staff and our IPAs who are doing that. It seems to be going fairly smoothly, but if you have a particular concern or problem, make sure you let our staff know. Make sure you communicate with us as you deem appropriate. We know that during these times, everybody is faced with unique challenges, and it may be difficult for you or your staff to cooperate and get us what we need. Let us know those problems, and we'll try and work through them with you. We are prepared and ready to assist clients with navigating this changing environment. We will be flexible when it comes to our duty to audit, and we'll take into account the guidance that exists at the time cities made crucial decisions about services and operations. We are asking everyone to do their part to help the audit team by documenting, and where appropriate, make sure you document and get clear legislative authority for all expenditures. This is an important thing that sometimes is easy to get overlooked. You come into a situation where you think you're complying with other mandates, whether it's state legislative mandates or federal mandates, and you forget that just because the money's been made available, you still have to have authorization from your governing body to spend that money. And you need to make sure you're documenting those ordinances and those resolutions and those things to approve those expenditures. This may be particularly important when it comes to CARES Act, and we'll talk about that in a second. How can the Auditor of State's office help? We are offering our expertise in these forums as a way to help assist our local partners, as I mentioned. While we can't provide a roadmap to dealing with each unique case, we encourage you to work locally with your legal counsel and elected officials where you can. We will still be deferential to well-reasoned legal opinions. And we find it beneficial to share financial pitfalls that could occur to create an opportunity for budget officials from all over the state to share their concerns and solutions. We'll serve as that bulletin board for people to share these best practices. We created in this mind a COVID resource page on our website that houses a lot of good information, such as guidance and policy changes our office has distributed, federal guidance and assistance, also a frequently asked questions page, and more. Hopefully everything that's on there you will find helpful. Additionally, for those having dramatic financial hardships, people anticipating going into fiscal watch or fiscal emergency as a result of this circumstance, we strongly recommend that you reach out to our local government services team early for assistance. Let's get in there early, and we will provide some resources, and we can even help underwrite some of those costs to try and get that assessment done early. So if you're in that situation and you think your community, your governmental entity is going to need the help and services because of fiscal watch and fiscal emergency, let us know so we can get in there and help early. What's this mean for city finances? Well, we've been having discussions about what's being impacted on finances, whether it's a revenue stream impact or whether it's other impacts. We tend to watch that. And we're seeing, for example, some cities are going to have income tax concerns because of the adjustments made by the legislature and the withholding, and whether that withholding applies to revenues as well as just the withholding and the tax liability. And what does that mean for potential refund obligations? And what does that mean for allocations among communities of tax liabilities? All of those are things that are still trying to be worked out and probably will take litigation. And so you just need to be aware of those concerns. So federal OBM and its annual compliance supplement, which is out, which includes the single audit guidance for auditors, will provide some information on the federal schedule reporting guidance. The federal OBM will not provide program-specific COVID-19 guidance until November, and it's part of a separate addendum. So you just need to know that that's coming, but it's not out yet. Keep an eye on our AOS COVID-19 webpage for developing guidance on these issues. We continue to update the page regularly with new information. Check out the GASB emergency toolkit on the webpage for guidance on gap accruals and disclosures related to COVID-19. As a reminder, OBM is the pass-through agency for all coronavirus relief fund monies distributed to local governments under House Bill 481 and as amended by House Bill 614, signed by the governor last Thursday. All of you probably are aware that you're about to get another tranche of money from 614 for CARES Act. OBM has some great FAQs available on their website. Make sure you check them out. Per the CARES Act. Now, this is an important point to note and remember this, because this is still the guiding requirements for CARES Act money. Recipients must use coronavirus relief fund payments to cover costs that, one, are necessary expenditures incurred due to the public health emergency with respect to COVID-19. Number two, were not accounted for in the budget most recently approved as of March 27, 2020. And three, were incurred during a period that begins March 1st, 2020 and ends December 30th, 2020. Those three prongs have to be met with every CARES Act expenditure. Separate accountability requirements apply to the CRF. Cities should deposit their CRF monies into an account for the related expenditures in a separate special revenue fund. Make sure you're doing that. You're not commingling. It is okay for cities to deposit distributions from OBM pass-through the counties under both 481 and 614 together into the same special revenue fund, since those monies received from the same source, meaning OBM, and used for the same purpose. Meaning you don't have to have a different special purpose, special revenue fund for the money that came previously from 481 and the new money from 614. You can put them in the same account because it's essentially the same purpose. With regard to 614, this clarifies that local governments do not need to adopt a specific resolution or ordinance to accept the 614 funds if the resolution has already been adopted pursuant to 481, because it's the same money. Delays the date by which local governments are to send unencumbered CARES Act monies to the county treasurer from October 15th to November 20th, so it gives you roughly another month. Requires the county auditor to redistribute unencumbered CARES Act funds to eligible local governments by November 25th. This effectively reduces the turnaround time by 2 days. You need to know that. Utilizes most recent census estimates published by ODSA in place of 2010 decennial census data as part of the redistribution calculation. 614 also increases from 25% to 50% the share of redistribution funds sent to the county, assuming the county encumbers all funds. If fewer than 25% of the townships and municipalities do not encumber their available CARES Act funds prior to the November 20th deadline. This amendment has the effect of ensuring that counties qualify to receive a more balanced redistribution should a few local governments in the county fully utilize their funds. 614 also delays the date by which local governments must return unspent funds to the state from December 28, 2020 to February 1st, 2021. This amendment reiterates that those funds may only be utilized for pandemic-related costs incurred no later than December 30th, 2020. This extension is an aid in accounting purposes only. All expenditures still must be incurred by December 30th. If you have not already, please check out OBM's FAQ updates from October 1st. They now include FAQs pertaining to House Bill 614 amendments. We've received several questions about how to interpret the encumbrance requirements that I just mentioned in 481 and 614. Encumbrances should follow the normal purchase order PO process, which may include the issuance of regular purchase orders, then and now certifications, blanket POs, and super blanket POs. Direct charges such as payroll are not normally required to be encumbered. However, in light of the language in 481 and 614, entities should consider encumbering eligible direct charges for the CRF anyway. If the accounting system does not permit the establishment of PO or a direct charge, entities should work with their legal counsel to consider having their governmental board pass an ordinance or resolution to effectively encumber such charges. And this is a viable option to legally encumber CRF charges. The resolution or ordinance should include information that would normally be included in a PO. OBM has added similar guidance to their FAQs as well. The CRF will also need to be reported separately on the federal schedule. Refer to our AOS COVID-19 webpage for the CFDA number for the CRF and other COVID-19 federal assistance programs. City finance directors, if you're not all totally confused yet, city finance directors should be actively communicating with their department heads to identify potential COVID-19 federal funding that departments may be entitled to receive and or have applied for. CRF is the largest COVID-19 program, but AOS has identified more than 90 programs that Ohio local governments could receive. Some require application. Others will automatically distribute supplemental COVID-19 assistance through an existing entitlement program. It is important for cities to make sure that they identify federal programs with COVID-19 assistance, as they may need to separately identify them on their federal schedules. Refer to the AOS COVID-19 webpage for COVID-19 federal funding spreadsheet listing the potential programs where assistance is available. The AOS COVID-19 resource webpage also includes a federal schedule reporting example for non-COVID and COVID-19 funding from the same federal program. Be sure to let your auditors know as soon as possible if you qualify for a first-time single audit. That means, for example, you are on track to spend $750,000 or more in federal funds during your fiscal year. For some entities that were below that, this single audit may be new to them. If you're going to be in that circumstance, please let us know ahead of time so we can prepare for that. The federal OMB initially extended single audit due dates, but then rescinded the extension for certain fiscal years. Following the deadlines are in effect for cities. If your fiscal year ends December 31st, 2019, single audits must be submitted by December 31st, 2020. Which is a 3-month extension beyond the normal September 30th deadline. For fiscal years ending December 31st, 2020, single audits must be submitted on time on September 30th, 2021. No extension is currently in effect. We are told that the OMB has no current plans to provide further single audit due date extensions, but we are advocating strongly for them and asking them to reconsider this decision in light of the late single audit guidance. Now I'm going to wrap up for now and open it up for questions. And as you can tell, I went through a boatload of information, most all of which is on our CARES Act COVID-19 website. I do want to give a shout out to Lori and Perry and Jake. Your regional liaisons are all on the line as well. Please make sure you're using my customer service people to get your questions. If you have specific CARES Act questions or specific questions on any of this, get them to us. We have a team of 6 or so people who are monitoring the CARES Act and the changes which occur daily, and making sure that the short answer, we're getting the information you need. If when in doubt, ask a question. Tori is also on our line here, one of our customer service reps for the central area. If you have a question, please click the raise your hand logo, and we'll get to those questions. We have our experts here as well, and make sure that you get there for your questions, and any questions we can't get to today, we will try and get back with you as well. As all of you know, we are having some technical difficulties. We couldn't figure out why you could not see my beaming wonderful personality live. Instead, we're just doing with a picture and giving you the video. The video isn't working here, but hopefully audio is working great. So I apologize for that, but short answer is we're here. We want to make sure that we get to your questions. So go ahead and hit the raise your hand button for a question. You can click to unmute, and we'll call on you as we go. So question, just go ahead and raise your hand. Okay, we have a question. Uh-oh, we had a question, but it went away. Amy, go ahead and unmute yourself. You're on the call.
Oh, I think, can you hear me?
I can hear you great. Thank you.
Okay. So I wanted to know, when will you guys know what CFR sections apply to these coronavirus funds? I submitted a question the other day to your office, but since we're on the call, because we had to get these projects done so quickly to try and reopen some of our facilities, we ended up having one vendor who's gotten more than $50,000 in projects, and they were not bid. So that's one of my concerns.
Hey, Marnie, are you on the call? I think you are. I'm going to go ahead and unmute you and let you have that one. That was a technical question. So we'll give that to our Senior Assistant Chief Deputy Auditor, who's been handling most of this for us. Marnie, are you there?
Yes, I'm here, Auditor. Good morning. Hi, Amy. So I think you're asking specifically about whether or not procurement rules under the Federal Uniform Guidance Act apply to the Coronavirus Relief Fund. Am I accurately stating your question there?
Yes.
Yes,
and also,
okay.
I guess it would apply to with even Ohio Revised Code.
Yeah, so you do need to follow any state laws around competitive bidding, generally always. And even in federal programs, that is still true. We still have to comply with state law anytime federal procurement rules do apply. The federal procurement rules are just an additional layer that you may need to comply with whenever you are undertaking a competitive project like that. For this program specifically, the Coronavirus Relief Fund, Treasury has indicated that there's only 3 areas of Uniform Guidance Act that will apply. And they've listed those as being allowable costs. So just making sure you're following the 3 prongs of the CARES Act and any guidance that Treasury has issued, such as FAQs. The reporting for federal schedule purposes, as well as quarterly reporting to OBM about your expenditures under the CARES Act. And then also financial management, which can include earning interest on the program, but then depositing that interest back into the Coronavirus Relief Fund and spending it on allowable costs of the program as a whole. It appears to us that Treasury has indicated that the federal procurement rules do not apply to the Coronavirus Relief Fund. They are applicable to other brand new COVID-19 programs, but not to the Coronavirus Relief Fund being administered by U.S. Department of Treasury. We've circled back and we've asked them to confirm that for us. Their response is not always crystal clear, unfortunately, but I will say consistent, at least, between both their Program Management Office and their Office of Inspector General. They both seem to be on the same page, at least on this issue, that the federal procurement rules, at least, would not apply to a project. Does that help answer your question?
It does, but I'm still concerned, you know, when they're audited, just because this one vendor did get more than $50,000, do I have my counsel pass something, or how do I alleviate that?
How do you alleviate it in terms of complying with the state competitive bidding process or? Yeah, so I would advise you in that situation, talk to your legal counsel. Again, if you've exceeded that state threshold, there's a number of steps that would have needed to occur. I'm not certain that talking just with the governing board and having them pass a resolution alone would be sufficient to remedy that. But there might be some additional legwork you can do in terms of soliciting price quotes and that sort of thing. There are some exceptions under the Ohio Revised Code as well that you might qualify for. Again, those are probably things that would be best taken up with your legal counsel. But at least for federal procurement purposes, I don't believe you'd have to comply with those additional layers of requirements.
Okay, thank you.
That is, just so people know what we're doing is answering questions. This is Auditor Faber. That was Marnie, who is our Assistant Chief Deputy Auditor and kind of running our CARES Act things as well. And so Marnie, I'm going to go ahead and leave you unmuted, and we're going to leave you on the line to help out here when we get into some technical stuff as we've done in the past. Our next caller is Catherine Fix. Catherine, you can go ahead and unmute and join the call. Catherine, tell us where you're from.
Yes, I'm from the city of Wadsworth.
Great to talk to you. Thank you for joining us.
Thank you. Glad to have the opportunity. Our ERP system will not allow us to move the expenditures out of the funds that have incurred those expenses. It won't allow us to move the detailed records, the subledgers, and the GL to the CRF funds. So we were wondering if it was mentioned that you may be able to get permission to do an allocation of the revenue out of the CRF fund to those other funds. And that way you also have year over year consistent records in the funds that incurred the expenses. You don't have this huge reduction in expenditures. Does that make sense?
Marnie, that's it. Does
Yes.
that make sense, Marnie?
Yes, it does, Catherine. Thank you. We do have an FAQ on our website that talks to this very issue. And what we've done is given some general guidance. Our preference is always to be able to reduce that expenditure and record it at the line item level within the CARES Act fund. Where that cannot be accomplished because the accounting system doesn't permit it, we have suggested that a local government might use a transfer line item to transfer in bulk everything out of the original funds that paid for those items and into the CARES Act fund with a couple caveats. Number one, you need to be cautious that you're not inadvertently creating a transfer under the Ohio Revised Code 5705.14 through 16. In other words, make sure you're only transferring those eligible, allowable costs out of those originating funds and into the CARES Act fund, and that you're keeping this as an accounting mechanism and not inadvertently transferring costs that would have not been eligible to that fund. The other caveat there is that anytime you're having to do this through a transfer or an allocation methodology like you're describing, your financial statements are going to be misstated. Your accounting system's not going to be able to generate financial statements that reflect by the appropriate line item the expenditure activity or even the receipt activity as it actually occurred. So there's going to need to be some type of manual reclassification process that you'll want to undertake before you file your financial statements in the Hinkle system to be audited. So those would be the only caveats. But again, the FAQ does allow for something like you're describing to occur when it is, a situation where the accounting system would not permit you to reduce the expenditure.
Okay, we believe that because we operate on a cash basis, that the allocation method, it presents a more fair representation of those expenses in the originating fund as well.
Mm-hmm.
You don't have this huge reduction in your EMS fund in 2020 because that was an allowed expenditure. So it makes for the cash basis reading of the financials to be more consistent.
So when you say you're using the allocation method, then are you allocating the activity at onset? I'm not sure if we're talking about apples to apples as you're talking about it a little bit more here. So if you don't mind just kind of explaining briefly.
Yes, so just as we do our income tax, let's say, we will allocate the revenue to cover those expenditures that have already occurred. So the expenditure remains, but you also have a revenue that offsets those expenditures, but that occurs after the fact. Yes.
Mm-hmm. So have you deposited all of your coronavirus relief fund revenue into a separate coronavirus relief fund within a special revenue fund? Okay.
Yes. Mm-hmm.
So you're just allocating the proportion of the expenditures that you want to charge to that fund then as you go.
Right, they would be actual expenditures. I mean, we'll identify them down to the penny, just as if we were moving them out, but they will remain there. And then in the gap conversion, that's when we remove the revenue and expenditure. So,
okay.
Yes.
So you are undertaking during your conversion process then removing any duplication that might be occurring.
Absolutely, yes. Mm-hmm.
Yeah.
Okay.
That should be fine. Mm-hmm.
Okay, great. I appreciate your help. Thank you.
Sure.
Again, I want to thank Marnie Frederickson for joining us. She is the Assistant Chief Deputy Auditor and has been running our CARES compliance unit. Marnie is a rock star here inside of our group, and I'm always happy to have her on these calls to answer these technical questions. Our next caller is Donna Helly. Donna, go ahead and unmute. You're on the call.
Yes, can you hear me?
I can hear you great. Thanks for joining
us. I have a question. We have between our finance department and our administration have some differing views on payroll for fire and police as far as public safety. As far as we're under the impression that they can be considered substantially dedicated and that their wages can be, we can use this money for those wages. And our administration seemed to think that we were told we couldn't. And I know this money was originally budgeted, although our budget was not passed until after March 27th. So we're trying to get some clarification on whether we can use these wages or if we have to have specific activities and hours for those activities that can only be dedicated.
It's a great question. Am I muted? All right. That's a great question, and essentially, it's our next two questioners have the same or similar question, both Preston Shaw and Sal and Oberlin. And so one of the questions, Marnie, that we're hearing, and I had the same conversation when I talked to a county auditor talking about sheriff's department. Originally, the guidance was while you didn't have to document the same nature for public safety workers, you still had to show the relationship to what that person was doing in responding to the CARES Act. Treasury, I think, came out with more recent guidance that basically some have interpreted as basically meaning any first responders, any public safety people are automatically CARES Act eligible for all things. It almost looks like revenue replacement. Marnie, where do we stand on that? And the caveat that I always give everybody when we deal with these is that the guidance from Treasury and OBM have been changing very regularly. And so I would be very careful relying on guidance that seems to conflict with the existing statutory authority. And remember, the CARES Act statutory authority very clearly did not allow for revenue replacement. So Marnie, where are we at on this, and where are we at on the current status of the guidance?
Sure, Auditor. Unfortunately for all of us, the U.S. Department of Treasury has been building a plane while flying with this program. What we have seen as of September 2nd, well, let me step back. The U.S. Treasury Program Management Office issued an FAQ earlier on suggesting that for police, public safety, public health workers, they could be substantially dedicated, and for payroll purpose, there could be administrative relief, which would allow local governments to charge their salaries, even if budgeted, completely to the program, because it is presumed that their time is being spent responding to or mitigating COVID-19. On September 2nd, the Office of Inspector General of the U.S. Department of Treasury, same department, just a different branch, issued their own FAQ that completely contradicted their Program Management Office's guidance. As you can imagine, we all responded immediately to this and advocated hardly with the agency that they needed to collaborate and bring some consistency to their guidance because they clearly were not on the same page. By September 21st, the Office of Inspector General rescinded its original FAQ and has now brought their FAQ guidance into sync with the Program Management Office's FAQs. You'll see the history of all of this reflected in the Auditor of State's FAQs. We have several questions pertaining to this very issue, and we've kind of outlined the history of how the guidance has changed and flip-flopped over time. But as of today, the guidance is in sync and is once again permitting payroll charges for public health and public safety workers to be charged to the program, even if budgeted.
Marnie, let me ask the follow-up then. Could that mean that the entire sheriff's department budget or the entire police department budget could be paid for with CARES Act money?
That's a good question, Auditor. And here's what we are advising. We know, with history of dealing with federal programs and Uniform Guidance Act, there are a certain number of employees within a sheriff's department. For example, the sheriff himself would be performing administrative tasks that are not going to be directly responsive to COVID-19 mitigation. So for those reasons, we advise you to think carefully about which employees within your department meet that substantially dedicated test, and only charge those employees who are meeting that substantially dedicated test. Anybody, and OBM has put out a benchmark of roughly 50% of the person's time for deciding whether or not they are in fact substantially dedicated to COVID-19 mitigation or response. For anybody else, you should evaluate whether or not they might be working a few hours during the week on COVID-19. And if that is the case, then there might be an opportunity to charge hour for hour those employees to the program, but it's not an automatic blank check. We can charge the entire department from our point of view.
So the fact that we're hearing guidance circulating out there that essentially is saying that the new guidance from Treasury says that law enforcement can all be charged without regard to whether they were budgeted or whether they're actually doing COVID-related activities. We believe that is not consistent with the statute and certainly would be troublesome at this point. Is that essentially where you're at?
Yes, we would advise you to take a very cautious look of that. And again, we have some guidance in our FAQ that explains, the different interpretations around this that can be made. But ultimately, these are issues you should work carefully with your legal counsel on as you develop rationale for charging payroll, and just make sure you're doing it thoughtfully and reasonably, so that you're not creating a situation where during the course of an audit, we would be in a position to have to question why you've charged an entire department to COVID-19 when there are certain individuals within that department that might be pretty obviously not working more than 50% of their time in a given COVID-19 response role. Make sure it passes the smell test.
All right, so let me go ahead to the next caller who I think has a question on the same issue to see if we need a follow-up. Prashan Shaw, you're on the call. Go ahead and open your question. You submitted it in writing, and the right question was, I think we answered it. Treasury guidelines now state that no justification is needed to use funds to pay police and fire salaries. Additionally, the government is not required to perform an analysis or maintain documentation of the substantially dedicated conclusion for payroll expenses of public safety personnel. Does the AOS have guidelines on audit procedures for the use of such funds? Marnie, do we agree with the original conclusion that they aren't required to perform any analysis or maintain documentation that's substantially dedicated for public safety?
Well, yes, so it's indicated we believe there are certain individuals within the department that are not going to meet that test. And so a government should take a look at that and make their decisions wisely with those things in mind, with that framework in mind. The Treasury guidance does indicate these employees can be charged, and the OIG and the Program Management Office have now come into sync on that point, that the charges can be made. But again, we anticipate, but we cannot say with certainty that when the federal government provides the single audit guidance to the audit community that we are still waiting on and likely not to receive until November, there's going to be procedures included that will require us to take a look at the reasonableness of the allocations that have been made and the decisions that have been made. So again, we advise you to proceed cautiously in this area. We know that the Treasury guidance as it is written right now, which has already taken a 180 turn, and we're unsure what will happen between now and the end of the year, as it is written today, does permit this, and it seems to be just blanket authority to do it. But we are proceeding very cautiously because we've watched the guidance change so drastically already to this point. And we still do not know today exactly what we are going to be asked to test and specifically what those procedures will require us to evaluate. So until we have that guidance in hand, I would be hesitant to just follow the guidance from Treasury blindly. I would do so with caution and making sure you're documenting your decisions along the way. Again, as the auditor mentioned it when he opened up the call, that documentation is going to be very critical for audit and will really go a long way towards helping you help us perform your audits with a lot of insight into the decisions that were being made during a period of time when the guidance was changing so drastically.
All right. So hopefully we got the question there for Sal and Oberlin. Sal, are you there? Okay, that was a written question as well. Jason Carr, are you there? Another written in question. So then the next one will be Paul Grail. Paul, are you there? I think Paul might have left the webinar. So apparently we answered his question. Amy Hendricks. Amy, you're up. Is that a written question as well?
Yes.
Amy,
yes.
how are you?
I'm fine this morning. How are you, Auditor?
Good. Where are you from? Where's Amy? Where's?
I'm the Finance Director at the City of Vermillion.
Oh, good. Beautiful place.
Up on beautiful Lake Erie, exactly.
Great.
Have a question similar vein to the one we just discussed, but our EMS services are actually contracted through a local ambulance service. So we don't have that as a payroll expense. Would it follow then that we could cover at least a portion of that contracted service we have each quarter during the allowable period to be covered from the CARES funds?
That's
Great.
a really good question. Oh, sorry, Auditor, yes.
I was going to say the same thing. Go ahead.
That's a really good question. And that is actually a question I'm surprised no one has brought to us yet. I guess off the top, my thought there would be when we read the Treasury guidance about the administrative relief provisions, it is specific to payroll. So initially, I would say that those payroll administrative relief provisions would not apply to a contracted third-party group who is performing EMS on your behalf. However, there could still be an opportunity to charge some proportion of their time if that third-party group is tracking hour by hour COVID-19 responses and mitigation that they might be performing. There might be an opportunity to prorate and charge some proportion of their time to the Coronavirus Relief Fund, as long as they can substantiate hour by hour that they were working on something that is specifically necessary and related to COVID. And again, that would have to be unbudgeted. It has to comply with the 3 prongs. So it would have to be, you'd have to see an increase in the amount of EMS activity that goes beyond what was originally anticipated in the budget. Because that administrative relief provision, as far as the budget goes, again, my read on that only applies to payroll. So if it's not an employee, it's not payroll. But if you can frame it within the 3 prongs and show that there is a need related to COVID-19 and that they can provide supporting documentation for the runs that they're making, any that might be COVID-19 related, that might be an opportunity to charge at least some portion of those costs.
Thank you.
Our next question comes from April Wilkerson. April is a writing question. Can you charge salaries and benefits all inclusive where you're making these allocations? Is it acceptable to use percentage basis for the department?
Yes, I believe it is. I believe it is.
And I certainly think if you're charging the salary, you can also charge the benefit calculations.
Yes.
So there you go. Carrie Kopfer raised her hand. Carrie, you're on the call. Go ahead. Unmute. You're on the call.
Hi.
Where are you from, Carrie? How are you?
Good. I'm from the city of North Olmsted. I'm the finance director there.
Oh, good. Thanks for joining us.
I actually was typing in a second question too, so I'll ask both of them if that's okay.
Sure. Go with the first one first.
My first one was regarding safety wages, because obviously this is important to all of us to help fill some of our budget gaps. But I found, just an FYI, I found that our dispatch center was required, like they asked the questions, the COVID questions, and then they had to call it a potential COVID run, so that, and then they had the total runs per week, and they had to send it into the Cuyahoga County every week. So that relationship, did that apply to all safety wages? Because if that's our population, then I would assume that the police had the same issue, that same correlation of the calls they were going on. So I was trying to use that statistic to apply to all safety wages.
That would certainly be a demonstrable measure of what your percent of your activity was COVID related, I would think, Marnie. I would think that would be certainly something that would be supportable.
I agree. I think on the surface, it sounds supportable. Again, it really comes down to taking the time to document these things and having, the documentation in hand to be able to demonstrate for audit as well. But yes, I would agree. It sounds like it would be there in this example.
And this is why we emphasize so often, document. Allow us to help you. And if you have something that's logical, well-reasoned legal opinion, that kind of thing, it's going to go a long way in giving us the deference to allow support for what you're doing.
Well, I just wanted to also let other people know that statistic does exist, because sometimes in government, someone's doing this, but you don't necessarily know that it's getting done.
Yeah, great point. Great point. You got another question?
I do. Also, early on, we split our public service workforce in half, and 2 weeks they worked, and then the other half were paid administratively, which was their full pay, and then they switched, and then the other group worked, and the other group got 2 weeks pay. originally they were concerned that, we were going to have a massive outbreak and then no public work things could get done. So is that considered the administrative leave? We tracked it. We called it a pay type, COVID pay type, and we tracked that. And is that a usable force or a usable purpose for COVID monies as well?
Historically, and I'll let Marty airfry this, but historically, what would trip you up was that their salaries pay was generically allocated prior, and this is not for your safety forces. This is for your public works and other forces, I understood.
Correct.
But historically, their pay would have been allocated in the previous budget. And to the extent that you didn't have to pay someone else to come in and do their work or pay somebody else, that prong, I think, trips you up. But I'll ask Marnie for sure, is I think how we've answered that in the past. Marnie?
Auditor, you're exactly right. I think there are opportunities with Coronavirus Relief Fund to charge an increase in administrative leave time to the program if that administrative leave complies with the Family First Coronavirus Response Act and the employees were unable to telecommute and they were not accounted for in the most recent budget. So again, it's that budget prong that in the description so far that might be the barrier for you.
Okay, that's fine, because honestly, the payroll for safety covers it all, but I'm just trying to research some other options just to make sure we have it all covered. Thank you.
Great, thank you. John Potts submitted a writing question, and this is why we're all kind of scratching our heads as well. And again, John, I will tell you that we get it, that these rules are changing, and you're all trying to act today on advice that may be changing tomorrow. But John's question is, how are we supposed to report in 2 weeks when the audit guidance on this first responder payroll is not coming till November? Doesn't make sense and puts us in a bad position. Marnie? Essentially, John's right. I don't know what we can say other than that, but the reality is we try and act, and that's why we've been pushing the feds to give us guidance early on. That's why we were pushing look, we would have thought it would have been a lot easier if they just did a grant to the communities and allowed you guys to run it through your ordinary process. But instead, because there was a disagreement on revenue replacement, there are all these restrictions. And since the restrictions are there, to the extent we have to audit you and we have to audit to those rules and restrictions, we have to audit the standards that are in place at the time. And that's why we need those single audit guidelines. But Marnie, where are we at?
Auditor, you summarized it exactly right. I mean, that's exactly the challenge that we're all in. We certainly recognize the frustration that exists at the local level. We're equally as frustrated on the audit side because we're trying to help, we're trying to keep, everyone moving in the right direction, and we ourselves do not know yet exactly what's going to be on the test. It's like being asked to study for a test, but the teacher never told you what chapter of the book to read. That's kind of where we are right now. We're following along with you, the changing guidance. And again, our FAQs, we've tried to really hard to create somewhat of a historical document of how the guidance has changed over time within the FAQ itself, so that we can use that both to your advantage when we're out there doing your audits. If you can document the date on which you made your decisions, when we come to do the audit, we can look back at the historical information and what guidance existed as of that particular point in time. And again, try to use maximum flexibility to the greatest extent that we can in evaluating the decisions that you were making based on the guidance you had available at that time.
So that goes back to the thing that I've been saying now for 9 months. We want maximum flexibility on our audits, but 2, we need you to help us help you. And that means document what you did, when you did it, why you did it. And if something changes, we can at least make note of that if we have to find that it's inconsistent with the current guidance. And so the other thing we really want you to do is make sure that your governing body, in many cases that's your city council, your village council, are also making votes on these decisions you're making, and that is going to give you some additional coverage with regard to the public policy and the public purpose. And when it comes to some of the CARES Act money, if you're doing a local government, if you're doing a small business or a rent assistance program, having those things appropriated as a public welfare type designation may get you around some constitutional issues and some other things as well. So you need to make sure that you're having those things be statutorily, in your case, ordinance authorized, and just make sure they're voting on that. So our next question is from Lori. Is it Lori Huff? Lori Huff, it's a writing question. We received funds in April from the Department of HHS in addition to CARES funds received in July. Can both of those funds be recorded in the same special fund, coronavirus relief fund, or do I need to keep a Department of HHS in its own fund? Marnie, there's certainly different special purpose funds. So those need to be, can they be commingled, or those need to be separated?
That is a great question. I'm glad that has come up. We have more than 90 federal programs that we've identified some type of COVID-19 assistance being distributed through. Some are pre-existing programs, some are brand new. The very largest pot of money has been the Coronavirus Relief Fund. So that's where we've spent so much of our attention. It's a brand new fund, it's a huge pot of money, and the requirements are complex. That money is administered by the U.S. Department of Treasury. It needs to be kept together in its own fund. And any other federal programs that you're receiving COVID-19 assistance, or just any other federal programs in general, also need to be separated. So if you have an HHS program, you would not want to commingle that with your Treasury Coronavirus Relief Fund money. Those would belong in separate special funds.
Great. Great. Next, by the way, we have only 5 minutes left on the call, and we have a list of questions and questioners. If you submit a question, we will get in touch and trying to address it. You can also feel free to email us at any questions at jmcoyne, JMCOYNE, jmcoyne@ohioauditor.gov with any questions, and we will get back to you specifically with an answer. We're also recording this call, and it will be posted to our YouTube page for and our regionals will send out the link to everyone. So just so you know, it's there. We are going to try and hit a couple of these. Bethany Stats. Bethany raised your hand, and go ahead, Bethany, if you're on the call.
Thank you, Auditor. I'm Bethany Stotts with the City of New Albany, and over COVID, the pandemic, our building department had realized how antiquated our system was for manual review of plans and being able to continue serving the public and serving the construction that's happening with us and maintaining social distancing. With that being said, they were already initially reviewing what type of software they would like to move to for electronic plan review. And we were anticipating, if the funding allowed, that to be budgeted for in 2021 to move forward with that. With that being said, now that the CARES Act funding is available and we're not sure what the revenues are going to be like in 2021, would we be able to, first of all, utilize the CARES Act funding for this software? And then second of all, if it's not fully implemented by 12/30, but the majority of it is implemented, we all know how software conversions go, would that still be able to be utilized for this purpose?
Marnie, what do you think?
Yeah, so that's a great example again of where we would walk through the three-prong test. The budget prong being a key first step is whether or not the software had already been budgeted prior to March 27th. And if so, that might negate the opportunity to use the funding for this. But assuming that, go ahead.
I said it was not in our 2020 budget. It was potential
Okay.
be in the 2021 if we had the funding for it.
Okay, so we pass that test and we move into the third prong then of what does it mean to be incurred by December 30th? And the way Treasury has defined that is goods or services must be received by December 30th, even if you're still paying for those goods or services after that date. And so basically what that means is any portion of the software costs that you would charge, you have to be able to document that this was necessary due to COVID, due to the ability of the building department to be able to be electronic in an environment where we're not able to gather personally together perhaps. So you have to be able to justify that need and then also ensure that any proportion of the cost charge that you have received the underlying services or software by December 30th, even if you're continuing to pay for some of that afterwards. And with software, it gets a little tricky because you might have just one upfront cost versus other softwares you might be paying for a subscription. You're getting a software option that has a 2-year subscription. If it would be a subscription model, you would only be able to charge the proportion of the subscription, for example, that you have received in essence by December 30th. So these last 3 months of the fiscal year here would be an opportunity to charge.
Got it. I believe it's something where we pay the software up front. And so
Okay.
that's the case. If we've incurred that cost and pay the software up front, but it's still not fully implemented by January, that would that pass that 12/30 date?
I would work with your legal counsel on that because it depends on what you mean by fully implemented. I mean, we've been through software conversions as well. You know, it takes time to learn a new software. You have ongoing support, but we actually have purchased the software and have it in hand as of a particular date. If that date is December 30th, you may still be okay, even though you might still be paying for some ongoing support. And if ongoing support is occurring after December 30th, that portion of the charges should not be charged to the program. But the software purchase itself might be.
Okay, I appreciate it. Thank you.
Sure.
Well, we have reached our allotted time for this call. We have a bunch of other questions that have been sent in, and we will go ahead and answer those to the extent we can, and we'll put those up on our site. And we will remind everybody that we did record this. So if you missed the first part of this call, you can go in and watch the recording and pick up what you missed. And by the way, we have the permanent ongoing Ask Marnie opportunity for anybody out there who has a specific question that they want to get to us. If you want to ask us a question, you can certainly do it by email at jmcoyne, C-O-Y-N-E, jmcoyne@ohioauditor.gov, and we will get back to each one of your questions with a response. You can also contact and reach out to our regional representatives who you should know, and they will get a question, and in many cases it will come directly to Marnie or one of our senior people to get you an answer, so that we can get you guidance that you can rely on. We have a bunch of other things out there that we'd love to have gotten to, but I'm sorry, time doesn't allow it. We will continue to put answers to the ones we have on our FAQs, or refer you to our FAQs if we knew who you were on your specific questions. So for example, Barbara, we have your question. Karen, we have your question. Brian, we have your question. Laura, we have your question. Just some in April, we have some that are right here in front of me. We will try and get you a response to your specific questions. Thanks everybody for participating. I do want to thank you for your efforts, but again, this is just part of our service to try and help everybody comply and to make this easier for everybody in this uncertain time. Stay safe. Please continue to provide the great service that Ohioans have come to expect from our local governments. Thank you for your help and support. And if we can be helpful in the auditor's office, please let us know. God bless you and take care.